News 8.
CPA Scott Adair is back with us. It's always good to see you. Welcome.
Good to see you too, Mark.
All right, so at this point, we're getting into the heart of tax season. It's top of mind for a lot of folks. Lots to talk about. Today, we're focusing on tax deductions. People like to know what they can deduct. Let's begin with the standard ones.
Yeah, so we need to walk through all of our standard deduction type items like mortgage interest, property taxes, charitable contributions is another big one. Property and casualty losses, as well as employee business expenses are things that we need to be top of mind this time of year.
All right, let's go right to property and casualty losses because that's something that does impact people who are watching.
Yeah, it does, and slight change here regarding this topic, and it really has made it much easier to claim this deduction, and that's because now it has to be a federally declared disaster area in order to be able to claim this deduction. It's again for any of your losses that you incur in a disaster area regarding your home loss, property loss, or vehicle loss.
All right, so you have to have that federal disaster.
Yes, that is the key.
Okay. Now, employee business expenses is another area we want to focus in on here.
Yeah, and a lot of changes in this area, and so you need to be careful as well. Because it used to be we used to be able to deduct a number of those subject to our adjusted gross income. But now we have to take a look at the American Opportunity Tax Credit as well as the Lifelong Learning Tax Credit. Things that we've talked about in previous episodes to kind of figure out what is the best avenue for you to take to be able to deduct those expenses as we move forward.
Okay, let's pivot now and talk about some of the things that are not deductible and maybe some of the changes here for this return that maybe we weren't thinking about a year ago at this time.
Yeah, and as you go through this exercise, this is a good portion or a good spot where you should really be talking to your CPA about it. But certainly want to take a look at the things that, like moving expenses, are no longer deductible. A number of miscellaneous type items that used to be deductible, such as your tax preparer fee, no longer deductible. So things like that that are small, but certainly things that can pop up and bite you if you're not paying attention to them.
Right. You don't want to have that wrong on the return, and they do add up as well.
Absolutely.
So these are significant changes.
Yes.
All right. Our time is short. Let's leave it there. Busy tax season ahead. As always, we appreciate the advice.
Thank you, Mark.
All right, if you missed any of our conversation, you know we'll share it online as always. Just head to rochesterfirst.com.